Well, welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. There are two approaches to building a financial model, top-down and bottoms-up. In general, you should use a bottoms-up approach for preparing the financial projections for investors, for which will be more detailed. To build a top-down financial model, consider the following. Start with the size of the market. Estimate the market share of the company in a sector or region. Use the price of the product to calculate the revenue. Increase the revenue based on the growth rate of the market and increasing market share. Input the expenses as a percentage of revenue based on historical data. The top-down approach is relatively simple as it uses market sizes and market share estimates. Use this approach to check against the bottoms-up model as a comparison. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.